Hey, good morning everyone, and welcome to the PivotBoss pre-market video for Wednesday, November 14th, 2018. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice that we have pulled back, all the way back to and towards the 2700 level, 2703.75. That's the midpoint and the key level that we've been using all year long, ever since the initial sell-off that began the year late January. This has been a very important level. Now obviously you definitely see an inverted head and shoulders pattern here. A lot of folks are seeing that. Again, it's not so much that this is forming that absolutely means this. It's just where we are in the charts. It's about major lows and can they defend this low, whether it's a higher low or a rejection of that low. You know what's going to happen. And because if bulls can keep this area bid, if they can keep this low in, you know, there could be more development here, but eventually that may result in a continuation down the way. If there's any failure to hold this level, then perhaps we have to double dip and then see if we get another buy opportunity here, or do we need to go down a little bit further and take out the lows of the year, which would be at 25.29. So again, do we have to clean out these lows to get going again? We're right here at the center of the larger key range. So based off how I usually approach the market, this is not usually the best zone to do business. It's usually the edges out here, the edges to come back in. If there is a change, a bias, or a transition from one distribution into the next, then it becomes a great area to defend. And that's kind of what's happening right now. So it's not a bad zone to do business at the moment, but it's right at the center of the larger range, so there's not as much opportunity here in terms of major rejections that can occur. So watching this to see how it develops. Again, this is a big time level. If it can hold this zone short term, we could come right back to 2800, and then we can drop right back down and we can keep on doing it. Nothing says we have to rally into the end of the year. We've had quite a bit of action already. And again, we could continue to build out for the next move. So keeping an eye on 2700. The NQ looks very similar again. This one, you can see here's the key range for the year, and we've mostly traded inside the entire key range. Then we traded outside the range, and now we're chopping around that top end of the range, which is 70.47 and so again, we're just kind of chopping around in this area. We could continue to see some chop that builds this thing out some more, and then eventually we either break down and test the lows of the year, which would provide a great buying opportunity, or we break to the upside and continue higher. You know, it's kind of this type of pause before we did this type of action. So again, we could have more sideways type of behavior. In the near term, 7K is a big time level. In the short term, you know, yesterday's highs, which is the previous month's close, that's all a key level here, and that's near that zone too, 69.50, 69.60. So you know, again, if there's any failure up in that zone today, that could lead to another round of weakness. Above that area starts to open up a return back towards 72.14 half. Taking a look now at crude oil, we had the biggest day of the year yesterday in terms of range. If you bring this up here and drop it down from 5 days down to 1 day, you can see here the 1 day range very, very large yesterday. So yesterday's range 4.6 points, huge move. It had been averaging before that on a 10-day basis 1.9 points. So yesterday's 4.6 was huge. It was the largest range of the day. Another day that came close was back in July. Other than that, nothing really comes close to it. There was earlier in the sell-off, we had something that was 390. That was pretty big. So yesterday was a big time day. It's the type of flush that you need to see, especially at the end of a move, because that could signal that this thing is almost done. 55 is the major market structure level. It took out all the gains that had been seen all the way up to that point and just wiped them all out. And again, 55 has been a major market structure level for a very long time. If you look at this chart, for many years here we had traded below 55 and mostly below 40, or between 40 and 55. That was the range for nearly 2 years. And recently, only last year, we broke above 55 and took off, and now we're back to it. So 55, again, a major market structure level. If this level can hold, we may finally have a level that could bring us back up and give us a new key range that we could see develop here between 55 and 75 for the next year and a half or so. Failure to hold 55 opens up a return back toward 49, and anytime you're dropping back into a prior market structure, you have a shot to go all the way across the range. So it's very important that 55 is held, because if not, this thing could drop all the way back across the range into 40. Alright, let's take a look at, I want to take a look at heating oil though. Heating oil has dropped significantly as well. Very similar to how crude oil has dropped, but not quite as severe. You can see here recently failed to hold 230s and dropped all the way back into support, 2.05s. That's support. This is what I was mentioning just a moment ago. Market structure here, nice development. You try to hold outside, you fail. Odds favor you go all the way back across. Now we're sitting right at support, near an LVN or at an LVN. Is this an area where we may begin to bounce back up? If so, 225 again would be the next target up. So this is a zone here where it has some great support, has a great LVN. Do we start to see a little bit of a bounce? So continue to watch the 2.05 down into about 2.03 half. That zone of support could be very important moving forward. If there's a failure there, you start to open up the next level down, which could be pretty significant. Alright, let's take a look lastly at the YM. The YM here has continued to trade within the larger key range as well. Very nice active movement off the zone. Here recently it dropped off the FOMC key level from January 31st and is trading kind of between this range right here. So again, this is not the easiest zone here to do business for the YM, for the ES, or for the NQ. They're all kind of in this messy zone here, but the day-to-day volatility has been good. After this big pushback here, we're holding basically on 25,200, 25K. All of that zone becomes an area of support. It's a little thick there, but we could continue to see some sort of strength that brings us back toward 26K. And again, that may not lead to more strength overall. That could just continue to lead to chop. So right now, do we get a little bit more flush and bounce? If so, that could lead to a nice move if we can get above the 25.6s. That could open up a nice return back toward 26K and 26.2. Alright, that is it for now. Let's see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room.